Hello, everybody. I'm Boss, Joe Boss, and welcome to another Daily Plan. Today we have quite a move. Our expectations from the start and even the middle of this week have been exceeded in a positive fashion. I'm fairly surprised by the move. There's quite a bit of volatility around the ECB meeting today, where right off the rip of their announcement, we saw European yields fall off a cliff and then rebound. They're now up on the day. Lagarde gave a speech that kind of initiated the rebound when she mentioned, we're probably going to still do our first rate cut in June. That seems more likely than April. So it seems that was the key driving push to reverse any of the sell-off that occurred on the announcement of the ECB meeting. Quite a few European assets have a big wick on them because of the initial release. And then once Lagarde started speaking and she said rate cut more likely in June, that started lining up with markets' prior expectations. And now we are out of, at least here on the DXY, in the last 34 years of historical trading data for this particular week, we've only come down to these prices relative to the pivot points one time before. One time. 2.94%. So this is definitely a tail move. And considering we have NFP lined up tomorrow, I thought today was going to essentially be more or less a flat or a bullish day on the dollar. I wasn't expecting such a risk-on move. And now going into NFP, that seems to be the consensus from the commentary and the outlooks that I've read so far here on the day. And just so you know, if you're in the trading group, on Saturdays we have an outlooks review. And I'm saving these articles and we'll be going over them as review in the outlooks review on 2 p.m. Pacific on Saturday if you're in the trading group. And man, I am looking forward to tomorrow because now if NFP actually comes in as expected, as we discussed yesterday, this would end up leading the dollar to the mid to low 102s. And considering when you get these larger than expected moves, you will start to need to increase the time horizon that you're looking at. So while you can set expectations for the week and the month, if your expectations for a week are just transcended and your expectations for a month are transcended, maybe instead of a week, you look at a month, and maybe instead of a month, you look at a quarterly expectation. Sometimes moves are so fast and so strong that you need to be able to zoom out in order to put that larger short-term move into context of the larger picture of future expectations over the longer-term horizon. And I hope that makes sense to you guys when I say that. So this is... and sorry for those little dings. That is... Let me mute that. Oh man, that's a lot of emails coming in. We'll have quite a bit to go over during that Outlook review. So if you want, you can actually try out the trading group for free. There's a 10-day trial on it. And you get access to the indicators and one-on-ones and, the group events and all that. So let's go ahead and look at some of these monthly levels here on the DXY. Yeah, you can see it. So most of the time, around 41% of the time, the low for the month comes in above this S0.5 pivot above the middle of the 103 handle, 103.5. Kiss FM, eh? radio station in LA I used to listen to. But now we are trading down here. Now you may look at this 14 and this 14 and say, oh, okay, so somewhere around here we're going to get the low. And I would agree with that interpretation. It's just now a matter of, okay, but where in this area? Because this is a 112 pip range. At least I don't know if pip is the right terminology here for this index. I believe points on the DXY is the correct terminology. So this is, you could say 1.12 points. 112 basis points, probably. I don't know. I don't think basis points is the right one. Anyways, let's continue on. Let's look at our lows for the month. Okay, so a lot of lows without using the seasonal data from the probability pivots. So the probability pivots say, hey, during the month of March, a lot of lows that are dollar bearish come in around here. If you take all the data from all the months and put them into a probability distribution, you're looking at this, and this is where your low usually would be in a nominally dollar bullish scenario, right? The low comes right off pretty close to the open, and right here would be where the low comes in most of the time during nominally range bound, maybe even slightly bearish scenarios, right? You could go up first and then down to here, and that would be your bearish target. But considering we've gone straight down here, we have more information coming out that could lead this thing going straight down, we need to be aware of this here as a risk. So you have this peak, and then you have this peak here. And I'll go ahead and bring us out so you guys can zoom in and check that out. Yeah, this is what I'm concerned about. So what would be the risk of a more significant continuation? I'd say just looking at the indicators, something like this would be something I'm concerned about. Once you start trading in a low probability area, so you could see these areas here with the peaks. On the right, on the indicator, you can actually see the probability value assigned to these bins on this histogram. And you can see the values are large here, and then they decrease, and then they start increasing a little bit over here, and then they go back to decreasing. And this down here, if I could just drag the chart, this down here would probably be your fat tail, your lower side of the fat tail here. So I'd be concerned about getting a low around here. If we go ahead and look at our seasonal data, you could see, yeah, that can be a risk. Still, you got an 11% around there. So it's important to understand the statistics that you're looking at with the data that you have available. This is continuous data. You're taking all the data on the chart into account for the month. And this is using just data from the month of March. So just for the month of March, yeah, your low could be around here. I mean, you could probably get your low tomorrow if NFP comes in higher than expected, because that would mean that US employment is not slowing down significantly. So that could potentially be the low for the month if that is the case, because that would, high volatility can induce more volatility going forward. So the volatility of NFP tomorrow, technically, I think just went higher because of what we got today here after the ECB. So the moves are, I think, going to be a bit more exacerbated. They're probably going to be harder to trade on intraday timeframes, unless you're like a master scalper or whatever. But I would be aware of this particular risk in my book. So let me go ahead and delete this, delete all these little highlights here, because I don't need them anymore. We'll keep this thing up as a placeholder. but I'm already positioned dollars short from the euro dollar trade. I'll go ahead and bring that up. Expectations were definitely beat. I was talking about this yesterday. Oh, we hit the expected target about a bar early, and now on the next bar we're exceeding it. And you can even see on these bars that fat bottom wick on the release of the ECB statement, and then Lagarde came out and zipped us right on back up. Yeah, and you do not get your low here very frequently on the month. And real quick, I'm going to bring up the yield spreads. And the yield spreads are continuing to improve. You can see how the yield spreads improved here ahead of the event at the beginning of the week. So while the yield spreads were quite negative here, leading to some caution, you have some big top wicks in there. Once the transition came in, now it's, yeah. And don't get me wrong, this is not the most bullish I've ever seen this indicator. This is kind of on a continuous scale of bullishness and bearishness, right? There's a degree of bullishness and a degree of bearishness by the strength of the color and then the quality of the yield spreads over the different durations. That's why we have these hamburger bars down here. And then we can view the actual rate of change values here in the table on the right to actually see is this red mostly coming from long-term effects or short-term effects? So we can more or less break down, okay, short-term things are improving. There's still some long-term lag that's kind of weighing this thing down. So there's reason to still be optimistic, even though these bars are red. That's why all this information is down here at the bottom, so then you're not just blindly looking at these colors, right? You can actually peer into the data that formulates them. So with this, we have to start looking now at monthly highs to get an idea. Wow, check that. That's the probability weighted pivot high, everyone. So we're currently trading at that. That's essentially like the mean of this entire seasonal pivot point distribution here from the probability pivots. So there's risk of going up here. There's risk of going way up here. I don't think we're going to go that high, to be frank. But I do definitely see the risk of definitely the high 109s, low 110s handle here on the euro dollar as a risk. And check that out. We have a similar look on the DXY as we do here on euro dollar. We have a bit of a bump here further up. Don't get me wrong. Most of the time you're getting your high here or your high around here at these two red spots where your probability density is greatest. Again, this is non-seasonal data. So on continued upside, I would not be surprised to see mid to low 110s sometime even next week. Again, it's really, really going to depend on how that NFP shows up and how the FOMC shows up. I mean, yeah, there is quite a bit of risk here. Quite a bit of risk. I'd say mid to low 110s is in the firing range here. Let's go ahead and check out a few other charts. USD CAD, because that one was also quite a mover. I believe this was yesterday. We set the expectation for USD CAD to move lower down here into the close on this bar here. Yeah, see March 6th, we set the expectation to go lower, and we've hit that expectation, but now, remember, these blue lines here are my closing expectations. So red is where I think a low is going to occur. Green is where I think a high is going to occur. And then there's timestamps for all of them. So the blue is, hey, I expect the close to be around here. But now that we've already moved this much, it's likely to have risks of moving even lower going into the close of this week. And yeah, there's still some risk there of tapping a bit more of the low side. You can see a lot of lows are right around here. I actually wouldn't be surprised to see, another, 40 pips of movement down, and then see that 40 pips retrace into the close. I mean, oh man, I'd actually like to hear some commentary out of you guys on what you're thinking, because to be frank, I do got a run here. I got about another 20 minutes or so. So I'd like to prioritize doing my commentary on charts you guys would like to see. I don't know if I'll be able to get to everything today. So if there's a particular chart you're expecting me to cover and give my commentary on, I'd appreciate the chat right about now. But in the meantime, I'm actually curious on Bitcoin. I haven't checked up on Bitcoin today. It didn't move too much. It's still recovering. Same analysis as last time. It's probably going to continue having some positive drift. Gold holding up, likely going into the high 2100s, potentially low 2200s. We're going to keep watching this because we need to continue seeing. It seems like the momentum is starting to die off a tad, but there is good positive drift and autocorrelation here. So any more spikes would definitely justify going to the 2200 spot. ES and NQ. Gotcha. All right. Oh, wow. Great recovery on the ES here. Great recovery. Actually, that high on today is right at the most likely bin. The bin with the highest probability density. I don't know if you can see that here. We got our big fat bump right there, and there's our high. Nice to see. And real quick, going into a close, yeah, I'll go ahead and update the expectation and say we essentially close either with a bit more positive drift from here up. Okay, 307. So that would be my expectation going into the close. Let's go ahead and look at our closing expectations using the seasonal data here. And yeah, wow, check that out. There's your 16%er right there. So I would not be surprised to see the close here on good NFP. On good NFP, just like in yesterday's stream, a lot relies on NFP, but now because of this spike in volatility we've had today, that implies that the move, any volatile move we get on NFP could be more exaggerated than we originally thought from yesterday. So our expectations have changed. Let's go check out NQ. NQ also did a nice recovery. Not as strong, it seems, as the S&P, but still a good, decent recovery. Still room to move higher, in my opinion, but I think it's probably going to drift and still close at least sub 18,500. So I wouldn't expect above 18,500. Probably it'll move up another 50 to 150 points around here. I think it's essentially anybody's game as to figuring out where NQ is going to end up closing on the week. Thank you very much for that, Isaiah. Let's see what else is there. There's also Aussie dollar, which I think did really well. Yeah, it did really well going up into here. The yield spreads are improving. Let's go ahead, hide these real quick. Yep, you can see so this is actually an example of what I was talking about earlier, where even though you have red candles here, if you look at the data, the breakdown of the data, most of it's coming from this column right here on the right, spread 3, which is the long-term lagging weight. So the short term and the intermediate term, they're contributing positively. And if we are able to get any more positive economic data out of China, that's going to also continue help the recovery out of Australia and New Zealand. The data that was so good out of China was I believe their exports were 7 or 8%. They really surprised to the upside. So maybe not necessarily the Chinese government should be focusing on increasing the consumption of their consumer base, because most of the people who would qualify under that are frankly very, very old. They're not really into spending what's kind of left of their life savings. So the Chinese government's going to have to do a lot to try and convince their older average population to spend more. But I think China needs to consider getting to the roots of, hey, if we export more, even if our plan to build a robust Chinese consumer group within China doesn't work out, we can at least still rely on shipping stuff and getting growth out of our exports. And China seems to be pretty well rewarded for that. And Aussie dollar, New Zealand dollar are kind of like proxy plays for China. Wow, you can see we set this bullish expectation here. Actually, on Aussie dollar, we did set a closing expectation here. Yesterday, I was essentially expecting sideways, but guess what? When new information comes abound, you need to update your expectations. I was a bit more bullish on New Zealand dollar, simply because of the probabilities were more in favor. And now it seems, well, also you're seeing a similar effect. This is the long-term spreads are weighing down on these recent prices. So I know I'll give it till like the middle of next week or the end of next week, and these yield spreads are probably going to look a bit more positive. Let's go ahead and look at our closing odds here. Yeah, positive drift. It's probably going to end up closing either just below 62 handle or right at it, maybe just above it. We'll go ahead and just set another. I mean, it's probably not worth for me to even draw this because it's just going to be a vertical line that looks like this that goes up for like 25 pips. And that it's an insanely short-term expectation. And next week's odds are also fairly bullish. So once we get the outlooks for the week ahead, going into today and Friday, we'll be reviewing them on Saturday and trying to set our expectations for the week ahead. On Friday, I do have to do a week ahead expectations video. So make sure you're subscribed for that if you want to see me draw these arrows tomorrow for next week. And that'll be a bit of a longer stream. We'll be going through all the different sort of assets here. Let's see here. We also have Great British Pound dollar. I think that did fairly well as well. Oh, yeah. I did look at this chart a bit earlier. So in yesterday's commentary, I explicitly pointed out a similar sort of risk that I pointed out on the DXY with this indicator. Hey, when you go into these lower probability zones, risk of reaching extreme values can become more likely. And at this spot here, I was saying, well, either this thing's going to close sideways or pull back a bit. And I don't necessarily see pound essentially going up close to 150 pips over the next 2 days. But this is clearly a risk to identify, so I'm going to keep these drawings here. I'm glad that I did, so I can prove, hey, this was a risk we identified in yesterday's stream. And yeah, if NFP comes in at forecast below the prior number or exceeds it lower, then that extra bout of volatility from today, likely carrying over into NFP tomorrow, this suddenly becomes more reasonable expectation, in my opinion. I really don't want to draw a vertical line saying, oh, we're going to go all the way up here. But I think for this particular case, because it's actually much further away, I'd be willing to still set it would still be kind of like a closing expectation still, while we have never, in the last 21 years, closed Great British Pound this high on the week. Have we ever had a high this high before in the last 21 years? Let it load. No. Wow. So maybe if we have more historical data past 21 years, we would maybe see a couple of data points up here. But this is why it's important not just to look at your seasonal expectations, right, with the probability pivots, but to also look at your continuous expectations given any week, given any month. What are the general returns for a week? What are the general returns distributions for, a month or a day? And to take your continuous data into account. When you're using seasonal data, there's a major assumption that goes into using an indicator like this. And that major assumption is the data is behaving seasonally, or in some nominally seasonal fashion. This is not behaving seasonally. This is pure momentum, high autocorrelation, and economically driven. So the assumption of, oh, this data is behaving seasonally doesn't necessarily apply here, which is why it's important to look at your continuous sets of data and identify tail risks. And I hope that makes sense to you guys. Yeah, wow. That'd be a pretty far out close. Well, let's not forget to timestamp our expectations. Let's not forget to timestamp our expectations, pretty please. And considering the yield spreads are also improving, this is on a 12-hour chart. We want to check this out on a daily chart. Oh, wow, a lot of monthly closes are up here, but we still have quite a ways to go. We still have 18 calendar days, 14 trading days, including the current one remaining until the month closes. So maybe we get a pullback in the last week and a half, or we get something particularly nutty. Oh, I just want to check out the closing odds here. Wow. Also for the month of March over the last 21 years, we've never had a close above this R1 pivot relatively. Wow, most of the closes are around here. So this is definitely a unique month in history, guys. We are watching history, at least relative to the last 21 years. I think Great British Pound dollar on FXCM should have more data available. It has 34 samples. And real quick, see how this thing says 5.88. You can actually go into probability pivots. Instead of using percentages, you can toggle on the frequency, and it'll tell you the number of times we've closed in between these pivots. So 2 times in the last 34 years, we've closed way up here. So that's the importance of having enough historical data to make your observations. Personally, I find the Oanda data to be better. It's frankly a preference at this point that I prefer the Oanda data. Also, Oanda is a broker, so I like looking at the Oanda prices and the bid-ask spreads here on Oanda. But you can go ahead and pretty much pull up these indicators on any chart, and they'll give you something. But yeah. Actually, one thing that would be interesting, Great British Pound, US dollar, FXCM, and let's look at our high odds here. So some highs around here, a couple highs here over the last 34 years. And if we toggle this on, yeah, you can see this is all just tail. Again, this data is continuous. It tries to take data from as much as the chart will allow us to. It goes back as far in history. So most months have this sort of distribution of monthly highs. But for the month of March, when we break it down just for the month of March for seasonal data, there's some risks around essentially 129. So we got to keep that in our pockets. We gotta store that away and say, maybe next week. Maybe next week. We just have to be aware of the risks, guys. Just be aware of the risks when trading, and things get a bit easier when you take care of the risks and the potential ways things can move. Next week is actually pretty darn bullish. We'll go ahead and cover this in tomorrow's stream, looking at our future set of expectations for the week ahead. Again, that's the nice thing about these indicators. They allow you to do some trade planning with these probabilities in the next trading period, not just the current one, so then you can be prepared. Okay, I think USD JPY is going to be the last chart here of the stream. Wow. Crazy move here. I think we just hit the likely monthly low that we set up in the monthly stream there on the last Thursday of February. Yeah, looks like we did. Go ahead and look at our low odds here. Yeah, most of the lows for the month of March are found around here. But you give me one good risk on NFP reading, and there's more risk. Yep, you can see a lot of lows are around here, seasonally and continuously. And then you have a little bump down here. So it's just a matter of being aware of the risks going forward here. Let's go ahead and check it out for the week. Our closing odds here. Again, for the week relative to weekly ranges, this is a tail move. Our yield spreads are roaring in favor of the yen. Roaring, because the US yields just plummeted. So this move, very, very driven by the change in US yields, I believe. Okay. I'll go ahead and say that's it. I mean, I'll go ahead and say if you guys like the video, And I'll be here tomorrow for the week ahead trade plans. If you're in the trading group or you want to try it out, go ahead, links in the description. On Saturday, we're going to be having the Outlook review event. And yeah, I think that's it. I'll go ahead and see you guys in a bit.